Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I've got so many questions and requests from the community asking me to look at CrowdStrike. CrowdStrike is one of those companies that have been doing really well until about a week ago, and they made a huge mistake and the whole world was on hold because of them. And the airlines, where the trains and literally every single business out there basically had a glitch in their systems because of I blame Microsoft as well, because Microsoft should know better. They shouldn't be relying on as much as they did on another external company. Anyway, so since then the company is down quite a bit. So I want to look at it today. I want to tell you exactly what the company do. What do they actually do? Number one. Number two, the financials. See if it's actually a company that we can invest in. And then I'll give you my opinion at the end of the video, inshallah. As always, if you like this type of content, like I've always said to you guys, it takes a lot of time to put these videos together. So yesterday, subhanallah, I recorded a video and I shared with you guys yesterday. I had to record it twice because first time I recorded, there was a mistake. There was a problem with the mic, because I was traveling quite a lot, and when I came back I was really tired and was not feeling well. And when I recorded the video, there was a mistake on the mic, because I changed my setup. I took the mic with me, so I had to basically install everything, and it was just a nightmare to redo it again. But honestly, genuinely, it takes a lot of time, and I really enjoyed putting these videos out there. And again, it's light-hearted conversation, tell you exactly what I think. It's not financial advice. I'm not a guru, okay? I'm just sharing with you guys what I think about these companies, and I hope you're enjoying that light-hearted conversations, inshallah. Anyway, let's get started and have a look at this. But as always, if you really want to support the channel, of course, please go on to the Patreon account, where you get access to the Discord, all the buys and sells that I'm making, the family portfolio, all the updates, and then you got different trackers and so on. And at the end, you got Sharia compliant investing ebook as well. And I have got a few more things that I'm gonna add, inshallah, in the next few weeks, that I want to make regular. So I want to do a few more weekly things which I have put together. So I'm currently basically on production mode, so I will be doing a few more things for the community, inshallah. Let's get started with the markets. Okay, as you know, the markets has been not doing well last couple of days because of what's happening with tech and so on. And as you can see here, we are now in here fear. So I hope we continue going down this route to maybe get to extreme fear, because the markets have gone up so much in the last few months. We want to see what is happening. So the S&P 500 right now, just yesterday basically, was down over 2%. Look at how crazy this looks. Okay, so this is just yesterday. This is not a month. 7%, 7.5% for Broadcom. It was down 7.5%. Qualcomm is down about 6-something%. That's just one day, guys. Just one day. Can you imagine if we get 5-6 days of this over the next 2 weeks, right? That is a lot. That is a lot. But that's what the market has been doing. It's been going up the opposite direction, 5-6% every single day, and we can't continue doing that. It's definitely not sustainable. So what we want to do is just to look at let me just show you quickly 1 week. So 1 week we're still in the red. A lot of the companies are still in the red, but for 1 month, in case there are some reds, so AMD, for example, Qualcomm down about almost 10%, almost 10%, 20% for this one here. CrowdStrike, of course, we know, we're going to talk about that in a second, but for the 1 month is down 31%. Okay, but you got companies like Tesla, that's up about 18% and so on, and Apple has done actually well to bounce back. But when we do 6 months, okay, everything changed. Is now all of a sudden we're talking about 90% for Nvidia. We're talking about 23% for this one. Oracle, of all companies, when I was looking at this earlier, I was like, wait, what's going on here? 24% up for the year. Even the banks are up. JP Morgan is up actually basically 23%. Okay, Eli Lilly 36. You know what I mean? There's so many companies that are up for the last 6 months, and a year to date. Okay, so a year to date is almost exactly the same, 130% for this company. So we want to see more of this. Okay, we want these companies to come back down. I don't hate these companies, by the way, but it's unsustainable to actually just keep going up and up. At some point we're gonna have to see some sort of correction, and correction can be, you know, to up to 20%. Basically, the S&P 500 going down up to 20%. And it can happen. It happened in 2022. If you remember, go back and check out what happened in 2022, 2021, and 2020. Everything went to the moon, right? In 2022, we were down, I think, at the end of that year about 21%, the S&P 500. So it can happen, and it might happen, but what we need to do is be really careful. Now let's talk about the company that we came here for, and for basically 1 month, as we can see, is actually down 32%. Okay, it has a forward PE right now of 67. What I'm going to do now is go through, just explain what the company does first, and then go through the financials. Okay. So the company is a leader in the next generation endpoint protection, which just means the endpoint just basically means the devices that we're using. So your computers, my computer, you know, your mobile phones and so on. So that's what's called endpoint. So endpoint protection. Just see this as a, you know, antivirus software that's installed on your computer that's looking for you. But in this situation, that it's not installed on your computer, it's installed somewhere else, but it's looking out for you, kind of thing. Okay, basically threat intelligence and response services, that's basically what they do. CrowdStrike's core technology, the Falcon platform, is basically what basically stops breaches, okay, by preventing and responding to all types of attacks. So both malware and malware free side of things. So they are a company that protects your systems, whether your system is a one device or one endpoint or a whole network of computers and so on. And the way they do it is slightly different to other companies. So that's a bit too technical. I'm not going to get into that, and that will be a bit boring. But the most important thing is a cybersecurity company that allows you to basically be protected from outsiders, if you think about it. Okay. Now, what I'm going to do now is just kind of go through some of the financials for this company. So the details I was just reading is basically some of it comes from here. Now, we know it's a system software, okay, and they have, of course, basically a subscription model, which is quite good, SaaS model if you like, and they of course provide cybersecurity solutions. CrowdStrike has a strong secular tailwinds because to protect the endpoints or computers. So cloud, identity, security operations are now becoming, of course, a massive thing. So when it comes to cloud and trying to protect people's cloud side of things, because right now, if you think about it, every single company out there, technology-wise, have some sort of a cloud where they store their data, customer data. It could be, you know, Walmart, for example. They have a system that allows them to store all their data, right? That data is stored somewhere in the cloud. So this company, CrowdStrike, is one of the companies that protects that data, if you think about it. So the more we rely on, you know, basically storing things online and so on, the more we will need basically the technology this company produces, or protection from for this company. So they provide all that protection for us, and the more we start using it, and basically cloud and so on, especially with the AI and everything that's happening right now, we're going to need this type company's product. So they're not going to go out of business. Basically, that's what I'm trying to say. They will be around. They will be around for the next whatever years. And because of the geopolitical situations between Russia, Ukraine, the US, China, all of that as well, that plays a big part. So a lot of, especially the US, they put a lot more emphasis on their basically cybersecurity companies to protect them against Russians and so on. So we'll see what happens with that. Current price is $258 per share. EPS is a positive now. It used to be a negative, but right now we're looking at positive. Market, we're looking at $62 billion, okay? Economic moat right now is a narrow, which basically means there are other companies out there in the same market. So for example, Broadcom actually is one of the companies, because Broadcom basically owns, okay, a company called Symantec, which basically is, I think, do you remember Norton Antivirus? I think it still exists out there. That company that owns that is owned by Broadcom. So Broadcom is actually one of the cybersecurities out there, because one of their business is part of that. Microsoft is another company. So there are a lot of other companies in the same thing. Now, out of the bat, I'm just going to let you know, one of the reasons why this company might not do well in the long run is when Amazon or AWS might decide, instead of using CrowdStrike software to protect their data, they might come up, because they have a lot of money. They can easily do it. They might decide to protect their own data, and they can do that. Google can do that. Microsoft can do that. Apple can do that. All of these companies, if they decide to do their own, create their own systems that protected them, okay, this company will not go out of business, but they will lose a lot of their customers. So you have to be mindful of that. So don't just think about, okay, this company is in the right basically market right now, what so and so, but the companies that provide cloud, okay, even Salesforce might say, okay, you know what, we can build our own basically cybersecurity section because it doesn't take that much, because these companies do have billions of pounds or dollars lying around. They can easily do that. That's why the company has a narrow economic mode. Beta is just 1.1, which is not bad at all. PE right now 485. That is a red flag straight away. And the forward PE is 67. So that seems okay. The sector we're looking at about 40, and the S&P 500 about 24. But look at the 485. We've seen Tesla and other companies go through similar things, so it could potentially be, you know, because a lot of basically a lot of investors are putting more emphasis on the future growth of this business. Okay, that's why they're basically trading higher multiples right now. And the 5-year average is 267, so it's way more expensive than it used to be in the last 5 years, which is also concerning. The price to free cash flow is about 60. And now free cash flow, they have a positive free cash flow of $1 billion, which is nice. Free cash flow yield of 1.7, which is not great, but it's built basically, this is increasing every year after year. Free cash flow margin of 32%, which is absolutely huge. Now, in terms of margins, it's almost non-existent. There's no point basically reading out this to you guys. Okay, this company is still in that growth phase. They will they will become profitable business. Operating margins and things like that will improve, but right now it's not there yet. And when we look at the total return over the last 10 years, this one we're looking at only for the last 5 years because they didn't exist, of course, for the last 10 years. It's about 24%. So they've returned annually 24% to shareholders for the last 5 years, which is quite nice. The revenue growth of the last compounded annual growth rate in the last 5 years as well is 61%, and the EPS about 26%. Now, just to share that with you, some other things as well, okay? The revenue for the 1 year is about 34%. So the compound annual growth rate for the trailing 12 months is about 34%. The 3 years, okay, is 48%. And the 61% for the last 5 years. The net income, look at this, 186, 41, and 24, which is absolutely solid. And EPS, you will see that now, that 27%, 26%, but for the 3 years, 34%. And free cash flow, and basically right now, is we're looking at about 37, 46, and 77. So they don't pay any dividends and so on. So it is a solid business when it comes to some of the basically the growth side of it for the last couple of years. So the business is actually growing massively. And look at this, next year they're expecting the earnings to grow about 24%. Okay, growth estimate for the next 5 years, then for every single year they're expecting about 24%. So current price is 258%. Let me just quickly show you. Let's go to earnings here, and then we will see that, because that's the average. So let's see per year what they're expecting. So next year, 2024, they're expecting the EPS to grow about 30% year over year. Okay, now 22%, 27%. So if we just focus on the first 3 here, okay, you can see that, but it goes down all the double digits almost every single year, right? When it comes to revenue side of things, year over year growth, we're looking at 30%, 25%, 24%, 26%, 29%. Now that's absolutely amazing. Now let's look at, is the company a buy right now? Because that's important, because we can see it's heading the right direction, is got good growth basically ahead of so far, and what we want to see is it looks like it basically is doing well for the next few years. Now, is it a buy, is it a sell? What was going on here? It's fairly valued according to Morningstar. 300 is their price right now. It's $258 per share. Now, simply Wall Street is actually saying 44% undervalued. They expect the price to be 466. And I was looking at it yesterday. I was like, how are they determining this? And if you click data for this company, they will actually explain to you. They're using discounted cash flow models, okay, to actually, and they'll show you the free cash flow, okay, leverage free cash flow here for every single year. So they're predicting it using free cash flow, and then coming up with this basically calculation, which is about 44% from now on, which is quite interesting. So it's interesting to see that they're actually quite bullish on the company, but they're actually using discounted cash flow model. Maybe they're basically over predicting. I don't know. Either way, 45% is what they think. Should be undervalued about 45%. Now, TipRank is actually saying $378 per share. That's 46% as well. So again, another one that is saying is basically going to do well. And then when you look at this, when you look at the basically, TipRank is actually saying strong buy. Seeking Alpha, more or less the same, 376, 45% upside from where we are, and is also a buy. So yeah, there you have it. So I will genuinely say, for me, the bit that worries me, of course, these companies will trade higher multiples because of the expectation that we're putting in these companies. But everyone is saying great things about this company right now. And remember, these analysts actually are paid to do this. So you have to be really careful. These two companies, they use discounted cash flow model, so it's slightly different. But TipRank and Seeking Alpha, they use the actual Wall Street analyst. And Wall Street actually gets paid to actually, pump the prices, if you like. So you have to be really careful. What I would do if I was you, okay, I am not buying this company anytime soon right now, because in my opinion, I'm a bit concerned about what is going to happen in the market in the next few months. And if the markets go down, this is one of the candidates that will go down at least to 20, 30, 40, 50% down. I've seen that before. It can easily happen. Okay. And for that reason, I'm just going to sit outside and watch it. If it goes away and leaves me behind and whatever, then I'm happy to do it. If it comes down, okay, if it comes down below $200 per share, then I will look at it. But right now, I'm going to leave it alone. Despite all of these amazing predictions, I'm going to leave it alone. From Sharia compliance side of things as well, we need to be careful, because I'm not sure why Zoya has given this, but this is the information that I've got from Zoya. We'll need to look at that, because that 5%, okay, if it goes below 34%, then the business becomes, it has to be, remember, less than 5% in terms of business activity screen. So we need to be careful of that. I need to check that. Maybe I'll double check that as well. And look at the shares buybacks. Okay, they're not buying back their own shares. Basically, they're diluting the shares. And for this type of business, it is normal. Okay, I wouldn't worry too much about it. So there you have it. That's CrowdStrike. In my opinion, I wouldn't touch it right now. It's a great business. It's in the right sector. It's doing great things right now. But my concern is this whole basically market, rather than just that one specific company. There are other companies in that sector that I will be checking in the next couple of days, inshallah. So stay tuned for that. If you're still here, okay, like the video, subscribe, and join us on the Patreon account. It will cost you 15p per day, and it really helps the channel. Have a wonderful day. Assalamu Alaikum.